Aloha. Hey, it's Julie Zemelis, 365 Hawaii, and I am with Real Broker, and I am here with all of these wonderful human beings for our February update. And we are going to be doing the island-wide update along with a mortgage opportunity with Travis Green. And we've got most of the sides of the island represented. We've got Lance Owens with Luva Realty. Raise your hand. There you go. Doing the Kona update. We've got Delaney Branham with Real Broker, and she's going to be talking about specific neighborhoods in Kailua-Kona. We've got Amber Haley, who is going to be hitting the east side, and we've got Angie Madrid from Keller Williams, who's going to be talking about South Hawaii and Ocean View Estates. I normally like get going with the money first, but let's do the update starting with Kona backwards, and we'll end with Andy and then go up to money. And then for you guys also, we're going to be talking about the insurance experience, what's happening here on our island. Lance is going to give us kind of like a statewide experience since he's the state uh, Hawaii Association of Realtors president now, which is information you're probably not going to get anywhere else, and also how it's impacting what's happening here locally. So let us start with Lance, and congratulations that he picked up his position, and we got a chance to party him up this last 2 weeks ago. So
Thank
congratulations
you.
on being the
I
president of the
appreciate
Hawaii
that.
Association of Realtors.
Thank you guys for being there too. It was awesome. It was a great event. So, jumping kind of right into it, just by the seat of my pants, it feels a little bit slower,
Mhm.
but we're going to dive into black and white numbers. I always prefer to use that along with the seat of the pants. But looking at condos, I was surprised this morning. There's 182 condos that
Good
are
going.
active right now. That's huge. It's way more than I have seen in over, well, since prior to 2018 or 17. So,
Mm.
so that's a huge number. So, the good news though is that we are seeing the number of sales are up on condos.
Oh,
So with that many on the market, there's more people buying them. So
oh,
that's the good news.
okay.
So it actually shows year to date right now, we are showing a 51% increase in the number of condos sold. So that's huge. We
Yeah.
were at 33 last year at this time, and we're at 50 this year at this time. So 17 difference, that's 51.52%. Homes are down. Now, remember, when I say year to date, this goes through tomorrow, and some people don't report till Monday, so we could be off a few still. But homes, it shows homes that were 66 sold year to date, and we are at 62 year to date. So we're off four homes, which is 6% decrease.
Which,
So, yeah, not
like I
bad.
said, it feels slow out there, but
Yeah,
obviously
feels
something's
slow,
going
but
on.
numbers are saying that, Lance, it's just you that's slow today. So, um,
I have
median
a few
home
people
price.
looking for condos that they're waiting for the prices to soften, so they're hanging out. So it's nice to see that people are actually buying condos, and it's a lot to look at.
Yeah, yeah.
Do you happen to have the list to sold?
I do not have it in front of me. I can have it. I'll get that shortly. I'll just give you
Okay.
really quick the on the median price for residential homes in Kona. It is showing me that we are down 1%. So I hope we haven't been waiting all year for more than for just that because that's a very small uh, amount. And condos, amazingly, it shows condo median price up 9.5%, 9.89%.
Wow.
I'm sorry, almost 10. So that's it. I'll look for the list of sold real quick and
Okay.
I'll turn it over to Lance.
I'm going to say to my people who are out here watching over here on YouTube land that actually what you just heard Lance say shows that waiting for the market to crash on the condo market because of the insurance experience and the HOAs is not actually really happening that
Yeah,
much.
not panning
So
out.
when you are considering lowballing every single thing that you're looking at, think about that. So Delania, while he's trying to get the list to sales price, just to show people again, what's the list, just what's happening with the pricing. Let's see here. We also what's going to happen with the neighborhoods. What's it showing? I mean, you've been doing this for years, and
Yeah,
yeah. So what's going on with the housing market and the condo market in the areas that you are looking at?
yeah, it's again, it's pretty consistent where we were looking at November, December. So in January, starting with Pualani Estates neighborhood, residential houses, There's two active. One is 965. It's been on the market 8 days. The other one is 1.1 million. It's been on the market 6 days. Sales picked up a little bit. There's two under contract. One listed for 925,000. It went under contract the first day on the market. The other one is listed for 1,135,000. They did have a $65,000 price reduction, and they went under contract after 43 days. Two sales last month, one at 965. They had it sold for 34,000 under the asking price. So they were just under $1 million. They sold more at that 965. They were on 90 days. The other one, 1.249 million, and it went asking price 4 days on the market. So some of them are moving really quickly. Some of them are sitting a little bit longer, but still everything under 3 months so far. So that's good. That's pretty good for that neighborhood. Looking at the condo, Ali'ilani, no surprise. There's
Oh boy, let's hear these numbers.
12 active listings.
Oh.
There were 12 last time we looked in November, December. There were 12 active listings. Price range is right at the same, 449,000 to 595,000. 2 bedrooms, 3 bedrooms in those range. 3 of them went under contract last month. There's one is under contract. It's listed at 468,000. They started at 508,000. We're on the market for 238 days. So they came way down. We'll see what they close at, how much further it went down. The other one, there was one listed at 499. Been on the market 12 days. That one went under contract pretty quickly. The last one, and this is an auction listing. It was listed 373, started at 486,000, went under contract when it was listed at 373,000, 171 days there. So be curious to see what that one closes at. When I looked last month, we looked at over the past few years, the highest and lowest. The lowest sales since 2022 in Ali'ilani were 415 and 420. So 373, even for an auction,
That's low.
really low. So someone got a really good deal.
Mm-hmm.
Two sales last month, one at 460,000, sold at asking price. 186 days in the market. They did have a $39,000 price reduction. The other one sold for 465,000. It was 34,000 under asking price, and that was also on 130 days. So it's I would not like to be a seller in Ali'ilani right now.
No.
You got a lot of competition.
Yeah.
You know, you're just gonna have to take the price you can get at that point, unless you're willing to wait it out.
Yeah. And tell people who've just recently maybe joined us, why is Ali'ilani sitting, Delaney?
Because there's 12.
Yeah.
But never mind, there's been a lot.
Why aren't the investors in there swooping them up?
I mean, the insurance, they were hit with the insurance, issue. And I think, didn't they have an assessment too?
Yeah, but also you can't have short-term vacation rentals in there.
Yeah, I mean, that one's always been, it's a 30-day minimum, no pet. So it's, it's not an investor condo. It's usually that condo tends to stay in the lower price range for condos for purchase price. And it used to have some of the lowest HOA fees. That's changed since the insurance hike. But for somebody that's looking to get a foothold, or somebody that wants to do a long-term rental, that's usually who's buying in Lonnie. And it's a really, really big complex. So it's not surprising to see a lot of turnover and a lot of listings in that one as well.
Mm-hmm.
Lastly, we are looking at Lokahi Makai, another residential neighborhood. And this one's usually not super active. January, there's only one active listing right now. It has been on the market for 30 days. There have not been any price reductions. It is currently listed for $1,185,000. Nothing under contract, nothing sold. There's one under contract in November, December, so that should be coming up sold when we look at February. It's probably sold at this point. And that's the mid-price range. Those have kind of started to creep up. A lot of them were in the mid-9s, but we're starting to see more and more at $1 million, over $1 million in the neighborhood. So it's a strong neighborhood. It's doing well.
Yep. And it looks like also, since that complex was built quite a while ago, that people came in and then renovated the crap out of it, and then they're able
Yeah,
to put that extra money in because they've added
yeah.
different things to it. So we sold one not that long ago, and yeah, somebody come in and just put new floors in it, and
Super cute. Yeah.
okay, thank you. Okay, yes, Lance.
I have my answers. Thank you for letting me do my
Okay,
homework
let's hear
really
your
quick.
answer. What's your
So
answer?
the residential homes from sale to original price is 96%.
Okay.
And on condos, it was 96.6%.
Okay. So
Interesting.
4% on sale.
Yeah. Days on market, we're looking at condos, the median days on the market was 45 and the average was 83.
Ooh.
So you're going to be sitting. And you know, just to bring it kind of remember Delaney, the whole reason years ago we picked Elite Elani is because there was always 10 for sale in there and we could gauge the
Yeah.
market, right? So
Yeah.
yeah, so
It's
we are
kind of nice
seeing
that it has a lot of inventory. So there's always something to look at in a good year for what's happening condo wise.
So Lance, when you say there always used to be 10 and now there's 12. So we're not completely off. I mean, because obviously
we're
we're all
just
talking about it when we had no inventory, when
yeah.
maybe there was like two condos for sale in there, and then we started going up and up. That again, does this mean that we're kind of like in a an even keeled market then to have that many on the market?
If we go back to 2018, 2019, it was not it was not uncommon to have 10 or 12 even for sale in there. That's why we kind of like to choose that one because that was a good barometer of what was happening.
Hmm. Okay.
Yeah, if I look back over like 23, 24, average like 4 to 5, 6 maybe
Yeah.
active each month. And then, yeah, and then it started it looks like 2024, it started to really pick up.
Yeah.
It's the
Yeah.
insurance fund.
One of the best ways I heard it described was that we were doing 85 in a 55-mile-an-hour zone for the last several years. And now we're back doing 55. And now you feel like you're going slow. You ever get to town and you got to do the speed limit because you're worried about the cops or something and you slow down to where you're supposed to be going. And that's really where we're at.
Yeah. Yeah. That's a good attitude. I like that. Okay. Okay, so Amber, you ready? Okay, ask to unmute. Don't let yourself.
All right. So now we're heading over to much more affordable East Hawaii to talk about the stats. And let's start today with the South Hilo district. So the median price for our last month of single family home sales was $627,500, which is an increase from our last market update where it was where it was 604,000 when we had this update in January, and quite a bit up from a year ago where the median sales price was 497,000 in the South Hilo district. The average days on market is quite high in South Hilo for the homes that are closing. So 80 days on market was average for the closings. There were 16 single family homes that closed last full month of market stats that we have. And that is longer than our last market update where it was 63 days on the market, and also quite a bit longer than a year ago where the homes that were closing were only on the market for 38 days on average. So kind of interesting stats in South Hilo. Our final list price to sold price was only 89.77%, which is the lowest that I have seen maybe ever on one of these updates. So that's kind of interesting as well. That is lower than our last market update where it was almost 95% list to sales price. Now, Puna is a little bit different than the South Hilo district. So the Puna district, which sits south of South Hilo, that's where most of our transactions are on the east side of the island. There were 65 single family homes that closed, and the median sales price, believe it or not, was $385,000. And That includes lava zones 1, 2, and 3. So keep that in mind. Lava zones 3, the price is higher than that, than the median price for the entire district. But that's an increase from the month before, where it was 367,000 for your median sales price, and also an increase from a year ago where it was 347,500. As far as days on market, those homes sat on the market for an average of 59 days, which, unlike Hilo, was actually less days on market than our last market update, where it was 81 days on market. And also a year ago, it was 57. So almost about the same as where we were at a year ago. Unlike South Hilo, in the Puna district, the final list of sales price was 96.4%. So getting closer to list price. And that's closer than it was for our last market update, where we were at 92.5%. And a year ago, we were at 94%. Still pretty much the most popular neighborhood over on the east side, where there are currently 91 active single family homes listed. That would be Hawaiian Paradise Park, which is in Lava Zone 3. So 91 single family homes listed there right now. The lowest price listing is $178,000. Or $178,950. So basically $179,000. That'll get you an unpermitted home in Hawaiian Paradise Park. And then the highest listing right now, you guys won't even believe this, is 2.38 million.
Wow.
And that's on 13th Avenue in Hawaiian Paradise Park.
So it's not
Which
right on the ocean.
It's not even on the ocean.
What?
It is on 2 acres. It's almost just under 3,000 square feet, 3-bedroom, 3-bathroom. I didn't make it to the Brokers Open. I really did want to see this property because I haven't toured it in person. But as far as I know, and definitely since I've been licensed and working in Hawaiian Paradise Park, that's about the highest listing price that I've seen. So that's pretty interesting coming on the market since our last market update.
Yeah. Wow. Well, we were listening to the caravan schedule today, and there's a house near the bottom of Kona Paradise, and it is an Airbnb, but it was like $2 million down at Kona Paradise. So when people put amazing houses in these neighborhoods because the land is less expensive, it's interesting. So I'll have to look that to see what they did with that piece of property there.
It is interesting. Kona Paradise too is Lava Zone 2.
Yeah, is it?
Yeah, right. Oh, I believe it is. I think it is. Somebody correct me if I'm wrong.
2?
It's 2.
Yeah.
You're right.
Yeah.
So there, build a beautiful big old fat house on. Yeah,
They
but
do
no,
have a voluntary fire department there, though, that helps with their insurance. They don't know if people knew that or not. They bought one of the homes and they parked a fire truck there, and that helps with their insurance.
I did not know that. I fun fact, I almost bought a house there back a long time ago. I fell in love with a house there, but I didn't. I almost ended up in that neighborhood, but I did not want to buy in Lava Zone 2.
Yeah, because Lance, you can have a fire truck all day long, but that doesn't stop the lava from taking your house.
Yeah, you're right about that. That's not going to help you.
Okay, so Amber, real quick, for anybody who's thinking about buying in East Hawaii, give them some clues here. It sounds like there's a lot of inventory sitting in HPP right now.
There is a lot. There are some very, very motivated sellers. I've been having conversations with other listing agents. I do have a listing in there that's been sitting on the market, and we've had some price reduction. So great opportunity for buyers. But a lot of sellers have had their homes sitting on the market for quite a while in HPP. So, a lot of listing agents are working with their sellers on trying to do work together and do like mega open houses and get buyers in. So there's definitely some great buyer opportunity in that neighborhood right now. Again, I gave you quite a price range, but I know people probably kind of want, what like the average kind of house goes for. So, for example, there are some, newer / new construction that's in the $500,000, $600,000 range. That will get you a really nice, like 3 3-bedroom house, sometimes 4-bedroom house on 1 acre, new or either newish or brand new construction. So a lot of great opportunity for buyers over there, especially, if you don't want to pay Kona side prices.
And you don't want Kona side beaches or sunsets or Mai Tais, right?
Sure.
Okay. Let's go with Andy. What's going on in South Hawaii?
I'm making a note. Oh, prices are up.
Oh.
There's more homes and lands going into escrow. It's been pretty busy. In Ocean View, which is Ocean View and Ocean View Ranchos, we always talk about how affordable it is down here. And we had 21 sales in 2025 so far. Average days on market is 109.
Okay.
The prices are up, average sales price ratio is 98.66%. And the high was 144.7% of asking price. That was for a permitted home.
Yeah.
We always have a mix of unpermitted and permitted homes, but the median days on market has dropped. It was 69. We were seeing that quite a bit longer at the end of last year. So it is definitely picking up. I'm seeing it because, I'm busy, that's and I just had it and I lost it. I was going to tell you what the average sales price to list or what the median price point was.
Yeah. I think just almost like what happened to Amber, though, is that it matters what part of the HOVE that you're looking at, right? There's a top, there's a middle, there's a bottom. There's, so.
Exactly. So the lowest priced home was like $65,000. But the highest was $925,000.
Yeah. It's like,
The average was $325,000.
okay. So the average is 325. 3-bedroom, 2-bath.
About 2 bedrooms. 2 bedrooms.
Okay.
Average, like here one sold, it's listed for 324, this sold for 312. That was an unpermitted home,
Oh.
2 bedroom, 1 bath. It was cash sale.
Okay.
Unpermitted home listed for 360, sold for 350 cash.
Yeah. And just so people know too, when you're listening to these prices, a lot of those kinds of homes do need cash to be able to buy them. Right?
Right.
Yeah. Because unpermitted. And those are lava zone.
Lava Zone 2. Insurance, we have insurance challenges and people that are getting financing, the interest rates are high.
Yeah. So yeah. But if you were to have let's just hypothetically again, Ocean View, decent, let's say a permitted 3-bedroom house. What are you looking at? 450?
400 grand.
400 grand. Okay. There you go.
There's one that was like, I look at one, we just had one that closed. It was listed for 379, 3 bedroom, 1 bath.
Mhm.
Sold for 390.
Okay. There you go.
I have a property in escrow right now. We had 4 offers on it. So prices are up. Prices are strong in the neighborhood.
Yeah.
You want a decent home. Here's another one. Listed for 389, sold for 380. 2 bedroom, 1.5 bath.
Wow. And it's interesting that you guys still have homes that still have 2 bedrooms, 1 bath, because that's not in general what you're finding as inventory on this island.
No, as a matter of fact, I sold in, Amber's neighborhood a 2 bedroom, 2 bath home in HPP. We sold over asking price. We went in at higher than we thought we should have been. First offer out of the gate was 10,000 over asking price.
Wow. Yeah.
Yeah.
Because they're smaller homes that people feel are more affordable. So it hits.
They think they are, but I think you're still going to pay you're still going to pay a premium price. Now, moving down to South Point, we had 11 homes that sold in January, since January 1st.
Mhm.
Average days on or average price point, average sales price, list price ratio, 93.44%, with the highest being 104% of asking, you know. Days on market was short. I had that and I wrote it down and I can't read my writing. That's horrible. But yeah, we're just seeing a lot of activity here. Yeah, so average days on market, median, 95 days, median 89 days. Average price point, they have a mix. We have Discovery Harbor, Mark Twain Estates, and Green Sands. So Green Sands is a mix of permitted and unpermitted, probably your lowest price point. Then you have Mark Twain Estates, then you have Discovery Harbor. So you kind of mix it all in there, and the average sales price.
Quick question, Andy. I'm sorry. Aren't those ones you just named, aren't they Lava Zone 6 too? Or are they?
Some are 3 and some are 6.
Oh, okay.
Yeah. Ocean View, it's Lava Zone 2. Ocean View Rancho is Lava Zone 2. Once you get onto the South Point, you have Discovery Harbor and Mark Twain and Green Sands, and that's going to be Lava Zone 3 and Lava Zone 6, depending on where in there you are. So for financing and insurance, they're all going to be the same down there, on the South.
So in terms of most of the houses that you're seeing sold, you're also selling a lot of land, right? You have a lot of land sales going on.
I'm doing a lot more home sales right now, but yeah, we have a lot of land. There was 57 land sales.
Yeah.
92% of asking price is what they're getting. Average days on market, 88. So we're seeing that shrink quite a bit.
Okay.
And is all over the board. I mean, you got some that are 8,000, you got some that are, 90,000.
Yeah.
Just kind of
based on what you can do with the land. But that way people just kind of have a feeling for that. 'Cause I've been getting people, of course, doing the whole, I just want to put my money somewhere and buy a piece of property, whatever it is, to put my money somewhere. So that's why I asked you that question.
We're even seeing multiple offers on land. And I put the last 4 pieces of land I put in escrow, they went in at asking price.
Yeah. In fact, we just put somebody in, and she paid asking, and the next day after we were just going into contract, somebody else showed up and was going to buy the land out from underneath her. And so, and that was in Kona Paradise. And it had been sitting on the market for 3 months. And so all of a sudden it's like, how that goes, right? You go away, I'm taking my time, and all of a sudden someone else comes in and says, oh, I want that too. But it went for full price. So so it just shows that there is definitely an interest in buying all the properties, including land on the island. Maybe you'll get a little bit of a discount, but there's still a lot of demand.
We're seeing a lot. I mean, land buyers, there's a lot of land buyers right now. There's a lot of home buyers. There's a lot of activities across the market overall, even though we are faced with higher interest rates. I'm sorry, high interest rates, and particularly homeowners insurance, particularly in Ocean View.
Yeah. And we're going to talk about insurance too, as soon as we let Travis do his thing. So thanks, Andy, and we'll come back to you on the insurance experience. So Travis, you're up with the money man.
Okay, so the mortgage update. I'm able to bring good news.
Yay!
Good news. So interest rates, mortgage rates improved like a healthy amount really this week. And so mortgage rates followed the 10-year treasury. So if you look at the 10-year treasury, we have been as high as about 4.8, or people might say 480 or so in January. Today, 4.25. So that's quite a bit of movement, and that translates in mortgage rates. So average 30-year fixed rate today, according to Mortgage News Daily, is about 6.8. Right. So this is a mix of lenders with and without points, probably 6.625 to about 7%. And that's typically for your, kind of top tier credit, primary residence, 20% down, single family home kind of thing. But that tracks with what I'm seeing in my pricing today. But for primary residence, buyers for me today, people are in the sixes. And so it's been a while since we've been able to kind of say that definitively. It hung out at 7.125, 7.25 for so long and so often that we've had a pretty definitive move lower. And so, the question next is like, why is that happening? Right? Like, what is different? And so it's a couple of things, but the kind of the general consensus in the mortgage community is that the data that we've been getting about the economy lately has indicated maybe some weakness in the economy, maybe a little bit more weakness than they thought a month or two ago. And so that's showing up in like the service manufacturing index and the the producer price index. Those are like wholesale inflation indicators. Consumer spending has been pulling back more than expected. Pending home sales, I don't know if you guys saw today, I think pending home sales hit the lowest point since it's been measured and since 2001.
No.
For January.
Really?
Yeah.
So, okay, so while we're all talking about how the market's cooking around here across the country, the pending
This
home
is nationwide, right?
yeah, then so the rest of the country's dropping.
Right. So builder confidence is down. So consumer confidence is down. That's, the consumer confidence I would take with a grain of salt because that's colored by people's political views, right? So, when Republicans in the White House, Democrats are pessimistic about the economy, vice versa. This happens all the time. But home builder confidence is low or lower and going down. And that's because of persistently high mortgage rates, high cost of materials, the difficulty with, getting and retaining the labor that they need. And then also the uncertainty in the mix of possibly tariffs on especially building materials, steel, aluminum, lumber, kind of the core things. So that is causing a little bit of flight to quality, right? So investors moving money, maybe taking some wins in the stock market and putting that into the bond market. And so when they buy bonds, it pushes bond yields down, and so that's good for interest rates. Let's see. The new Federal Housing Finance Agency, right? So that's the guy who's been appointed to run that. His name is Bill Polt. Federal Housing Finance Agency, the FHFA, is the agency that oversees Fannie Mae and Freddie Mac. And because of Fannie and Freddie being in conservatorship since 2008, that's also the agency that runs Fannie and Freddie, right? And so important thing for the mortgage market. So that guy, Bill Polt, had a Senate hearing today in front of the Senate Banking Committee, along with the new appointee to head up the CFPB. Both of these people have the endorsement of the Mortgage Bankers Association. They are real estate and mortgage background people. And a couple of things just from the Bill Polt, the FHFA director, from his hearing. I just wanted to mention some highlights. He was pretty measured in what he said, but he did say that his focus will be on fostering more housing, increasing supply of housing. His history is his grandfather was a prolific home builder. And so he's been in the family business. I mean, it's like a huge, huge company now. He's worth like $200 million, this guy. But it's, third generation in real estate development. So increasing the supply of housing. He also flagged that he thinks that there's opportunity for more manufactured housing. It's important if the FHFA director is saying that because, Fannie and Freddie put a lot of, they manage and create the guidelines around financing those structures. And so his point was, manufactured housing has come a long way since the 1970s. and there are some really great products out there that we can get to market, kind of efficiently, just to increase the supply in certain areas and increase the supply specifically of affordable housing. And he did acknowledge, he said he didn't have anything specific to add to the insurance topic beyond that. His quote was, "The cost of insurance is insane in this country." And so kind of, I like the sounds I was hearing out of his mouth. And then the other thing that the bond market's paying attention to, and thus mortgage rates are being affected by, is the budget, right? So the federal budget, they what do they have, Lance, until March 14th, I think, until like funding authorization runs out in Congress. And so the Senate put forth their spending bill, and then the House did their own spending bill. And so the House spending bill, it's not formally a budget, but it is a spending bill, extends and expands the tax cuts from 2017 from the Tax Cuts and Jobs Act. So it extends those, and that is, according to Congress, that will come at a cost of about $4.5 trillion over the course of 10 years. And they do call for $2 trillion in spending cuts. Where that comes from is not clear, but it's, as constructed now, adds to the deficit, adds to the debt. And so bond market does not love that, of course, but it's, hasn't even been passed yet, hasn't been signed into law. The cuts haven't been identified, things like that. So those are kind of the main events this week that have been influencing mortgage rates. But just to bring it back around, interest rates are the lowest they've been since like December 10th.
So get a mortgage now.
Yeah.
Lock your rate. Do not gamble with this.
Yes, because
December 10th, you said?
Since December 10th, yeah, lowest mortgage rates on average since about December 10th.
that's
I love the conversation about the manufactured housing too, because I think that's so important. Like Ford doesn't come out to your garage and build your truck for you. They build it somewhere and ship it to you, and it makes so much more sense to have an assembly line of walls and things like that, and bring them out on a flatbed in the middle of the night. And they did that for a little Kahi Makai, and it was kind of interesting how that's what that big white tent is by the harbor originally. They were building those walls and stuff in the big tent there originally.
Yeah. And if we had more manufactured housing, we'd have opportunities for more affordable housing. We have the same thing. So yeah. And and I know people know on this call that and Lance, am I correct in saying this, that manufactured housing is like, you cannot bring that on the island? Is there like a law against manufactured?
Pretty much, yeah. Yeah, it's I tried to do it many, 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 many years ago, back even in the 90s. Housing it was crazy in perspective to what it cost to build, and we looked at trying to bring something over. Even with the shipping costs, it just couldn't be done. You couldn't get it to pass the codes, even though the codes were built stronger. They had 2x6 walls and things like that. It was, and this isn't a bash against unions, but it's the unions that's stopping it, and they're stopping people from. They need to just come up to date and work with, work with manufacturing their own homes and doing it that way. It just makes sense.
Yeah. And as Andy will attest to, that people are basically making manufactured housing in HAV, with their own, with pallets. People are creating these unpermitted structures, right? And it's whatever they come up with, and then they just put it together because that's affordable housing. And so people are
With the perfect weather year round. I mean, honestly, a pallet will keep the wind off you, and
and
We don't have tornadoes.
I was gonna say, your HOAV has never been actually hit with a hurricane or massive flooding. The only thing it's got, see, if it because it has the aspect of the volcano coming, you can make it like a mobile home and just take it off the spring and get away from the lava flow. So they should allow at least that, in the lava zone areas. Have they talked about that at all, Landy? That do they have mobile homes out there in some level? I've heard that some people are putting them up on the volcano fields.
I'm trying to think. I mean, the only place that I don't think so. There was actually, where did I see one? Somebody moved a manufactured home down onto Ocean View Ranchos. There's a couple of them sitting there, but they're not doing anything with them. It was kind of surprising to see them here. I mean, even out there in Kalapana, well, what used to be Kalapana
Yeah.
Gardens, which is
Yeah.
now on a vacation land or vacation lots or something. I've never seen a manufactured home down there. I've seen cargo containers.
The cargo containers, yeah, yeah,
Yeah.
yeah, yeah. So that's people sometimes, of course, are always trying to crack the nut on affordable housing on this island. It's like, oh, that's not how it's going to happen. So,
Well, what they're doing is I've seen in Puna, they have those, somebody on the side of the road is selling those sort of expandable, you can get them on Amazon. Those sort of weird expandable containers. They pop out on both
yeah,
sides.
I heard those. Yeah, are really cool. They're actually selling those. Yeah.
I saw them in HPP actually. Somebody had it listed for sale. It kind of drove me crazy. And then there was another one, I think in Volcano. Someone had one for sale. They order them, they put the whole thing together.
Yeah. Oh, so
They're
you
kind of
think
all
that?
self-contained. It's kind of crazy,
Yeah.
you know.
Well, I was in Maui, and those are what they're using for the fire victims is those expandable those homes. And
Yeah.
so, okay, so thank you, Travis. That's I do believe you're right. Ring the bell on get your mortgage. Our national debt isn't getting any better. So let's talk about insurance. So Lance and Travis and I had a conversation about some information that was coming out about Oahu that I was thinking, oh my gosh, everyone should know this. And they're like, let's, don't get too crazy. So Lance, tell people a bit about what's going on with the insurance experience and what's going on with Oahu versus maybe Big Island.
So a big problem is, and they say this has nothing to do with it, but right after the Maui fires, our insurance rates went up tremendously. And partially, I kind of believe that partially because we were not on the radar map. I've felt for years now that we've been underpaying, and I wasn't going to pick up the phone and tell anybody, but it was kind of people would come in from the mainland and they would talk about how cheap the insurance was here. They were surprised. So I had a pretty good handle that we were getting a good deal for many years, but now it's like some places have gone up 300%. So it's kind of insane. So not only are they making up for before, they're charging for the future. So, and what's happening is a lot of these high rises in downtown Honolulu are not able to get 100% coverage. They're getting 80%. And what I'm learning along the way here, because we're watching this bill that's passing through. They're trying to help subsidize kind of like a last chance type of insurance, almost like the HPIA that they're offering in Lava Zone 2, right? And so it's like a last chance insurance, and they want to do that for the other 20% in the condos and on the high rises. And where I have a problem with that is that they're limiting that to anything over 4 stories high. So it's going to eliminate all the outer islands, and the state bill is basically going to be a Honolulu bill. But they're trying to address the insurance, and a lot of it is really it's not. They're claiming that these buildings can't get 100% insurance, and the more I'm finding out is that they just don't want to pay the price. That extra 20% hit that they're taking, they're not want to pay the price. So they're coming up with these plans. It's going through legislation right now. And I know Travis and I had a conversation about how we feel about that. And actually, he had a much more technical and better explanation. I'm going to turn it over to.
So Travis, what's your more technical?
Well, I think that these are kind of maybe two different things or two kind of like parallel things that we're talking about. Yeah. So on the one hand, there's the big, like the Honolulu high-rise hurricane and 100% replacement coverage thing is like its own little like crisis, right? There's like it's like a storm within a larger storm.
Right. But we still get affected by that kind of stuff.
For sure, absolutely, yeah. Because like I mean, the nature of insurance guarantees that. So the kind of controversy I think that we were talking about maybe last week or week before was someone had, you know, the Maui wildfire settlement got approved, the 4.04 billion. The kerfuffle, the insurance kerfuffle from that was the court did not allow the insurance companies who paid out claims to sue entities that they felt were responsible, right? So they wanted to sue Hilo and they wanted to sue Kamehameha Schools for, you know, not trimming their grass enough, right? So they wanted to like go after these other entities because they said that it, you know, if it didn't lead to the fires, it exacerbated them and increased losses and things like that. And so the settlement as structured, and I'm not a tax professional, and I, you know, this I think is kind of just way oversimplifying, but it was like a global settlement. And so there were over 450 different lawsuits around the fire. And so in order to essentially like get a decision and get some money going out the door and to put this to bed so that life can move on, this was a global settlement that basically, you know, settled everything. It was just like, no, this is it. This is the settlement. And so the concern was that since these insurance companies were being told, you can't do what an insurance company wants to do in this case and go sue these other entities to recoup your losses, that in itself is going to lead to an exit of insurers from our state. And so it's not clear that it will. You know, there's established, I guess, Hawaii case law and like precedent for this. Mm-hmm. And so that, you know, it was like, this wasn't like out of the clear blue sky, right? So, and this is obviously an extraordinary event. The other thing that I wanted to bring up out of that was that like this whole idea of subrogation, where an insurance company, you know, let's say there's a loss to an insured person, the insurance company pays out the loss, and then the insurance company then goes after whomever they hold accountable for this loss event, or their insurer. And so that's called subrogation. Again, simplified, but I just think it's significant that Fannie Mae and Freddie Mac, the aforementioned Fannie Mae and Freddie Mac, currently require for condo master policies that they contain what's called a waiver of subrogation or a waiver of rights of recovery. And so the way to think about that is they say, like, the example that is often given is maybe an individual unit owner's you know, does something, maybe their gas grill or whatever causes damage to siding or whatever of the property, and then the master insurance, because it has to do with the exterior of the structure, files a claim and they get it paid and they move on. This waiver of subrogation ensures that the master insurance policy company cannot then go and sue the unit owner who was responsible for the loss event, right? And so that is something that is required, that waiver of subrogation, to ensure that individual unit owners are not pursued by the master insurance policy insurer. That's required for condo policies that are going to be approved by Fannie Mae and Freddie Mac. So the point I think I want to make with that is that it's not just like the state of Hawaii Supreme Court that is like hostile to insurance subrogation in this case, right? Like Fannie Mae and Freddie Mac in the situation of condo ownership, because they're collective owners and some of them are going to be, you know, need to repay loans that are guaranteed basically by Fannie and Freddie, say no subrogation for the master insurance company in this unit or in this complex as well. It's relatively recent development. That's within the last couple of years. I think 24 is when Freddie Mac started requiring that, June of 24. And so, what's playing out here is playing out in other places, but especially in coastal places, especially in places where, they're prone to forest fires, to wildfires, things like that. And so, Fed Chair Jerome Powell, in recent congressional testimony, expressed that he's concerned that in the near to medium term future, say 5, 10, 15 years from now, that there will be swaths of the country that will become mortgage deserts because of insurers. If we continue on our current trajectory, insurers leaving these areas, pulling out non-renewals, no new policies, and then banks and regional lenders pulling out because you can't insure the properties, so they're not going to lend there, so they're going to leave too, which has knock-on effects as well. And so, I think that, it's certainly a crisis, whether the government is, they acknowledge that it's a crisis, whether they're treating it as one, I think is debatable.
Mhm. Okay.
And thank you for bringing that back around.
Yeah.
Travis, because I know we talked about that a couple weeks ago, and I got kind of fired up. I get it blended in together because in the end it ties in together. But you're right, a lot of that conversation and the fear email that went out to people was that we weren't going to be insurable, right?
Right. They're going to pull all the flood. Yeah. And then in that also, I think you talked about this, is that people in Hawaii have paid like millions of dollars for their insurance policies, and they've never pulled a penny out. And now they're doing this. So they're saying business wise, it really wouldn't make sense for the insurance companies to leave because they still are making millions of dollars on insuring people in this islands, right?
I think one of the things they look at too, Julie, is I think they expect Hawaii to get hit with a hurricane every 10 to 20 years.
Mhm.
And we haven't been hit with something significant since Iniki, right? That was
Right.
back, I think that was 92.
Mhm.
And so it's kind of like we're way overdue for a hurricane. So that's another thing that's scaring me. I know it, and but that is what they're looking at. And
Yeah, because when the hurricane hit Kauai, it was absolutely devastating.
Yeah.
Yeah. And so, okay, then that's that. But how about like everything else that happens here? And the
Right.
fires, the earthquakes, we make a joke that insurance companies look at Hawaii and we've got like 7 things that are naturally going to ruin the islands and the homes and stuff. And yet we somehow survive. But also that brings us back to Travis talking about home insurance, that people are not out shopping for better rates for their home insurance any longer. Travis.
People are getting dropped, right?
Yeah.
Yeah. You don't want to get exactly. Yeah. So the point I was making, I think, before we started recording was my office is I rent from an insurance office owner, from an Allstate owner, and he was in the office the other day, and he has several, so he's in periodically, but he was just saying that something that he's noticed recently is that when they announce and push out those premium increases, they're losing way fewer customers than they used to. And it was like clockwork. It was like the same percentage, you could kind of count on it every year, renewal time or whatever. If there was a premium increase, it was like X percent of premium increase is going to lead to X percent of our customers just like, leaving. And that rate of attrition has really slowed, and people are not going out there and going, you know what, I bet I can save, $25, $30 a month by, switching to whatever. And the message is, love the one you're with. Especially if you have a long history of being insured by a company, and you have pretty modest or clean, claims history, or it's, been pretty light. If you go somewhere else, you have a claim, you get dropped, you come back, you're a new customer again, right? So I think there is some wisdom, especially in this environment, that like, if it's not killing you, maybe stick it out.
Dig it out. Yeah. 'Cause
Insurance advice, not marriage advice.
right.
I've had
And
'em
I
drop
found that
by.
quite a few people who are watching this show actually own homes here in Hawaii. So to tell them that they already have an insurance policy and don't go out shopping, that's good
I'm not
advice.
saying don't shop. I'm just saying like just be aware.
Be aware of that. Okay. Lance, that's how you
there
guys.
are trade-offs.
Well, just, I've told that story before, but that recent closing we had where the insurer looked at the MLS photos and saw that it was a composite type roof and it wasn't a metal roof, would not insure this $2.5 million home that wasn't even, it was just 20 years old. And they said, no, we're not insuring that home with that roof. It needs to be replaced. So if just simple things like you even putting it on the market could cost you losing your home insurance.
Oh, wow. And then Delaney, you had said something about uh that was one of the things too, that people were picking that to see if they were going to get insurance.
Yeah, there's an escrow going right now in our office, and the insurance adjuster is asking tons of questions about the wiring and the electric plumbing and all these things. And these people hadn't had the house all that long, so they're like, I don't know, this is all, we didn't build. We don't know. We don't know anything, but they're really nitpicking. And I think any reason to deny a policy or anything to be worried about, they don't want to lose their, their margins, I guess.
Yeah, yeah. And then Andy or Amber, have you guys seen anything in your own personal experience around like the insurance problem?
Yeah. I
Okay.
know it's really bad for Amber. I just told somebody, in my opinion, I think Leilani Estates, in terms of a market, it's kind of flatlined. I have a property. I have had two agents bring buyers who want to step up to the plate. They'd write full price offers on the property, and then they got the quote for insurance.
Oh boy.
They were both paying cash, $12,000 from HPIA. So, yeah. So they said no, even if we tried to mitigate that somehow, like, hey, we'll give you the first year. It's just too much. I think it's ridiculous. There's no choice. And even in Ocean View, where you're in Lava Zone 2, it's not nearly that bad. But when I would have conversations with people, does your buyer know what the cost of insurance is here? Because the starting price for insurance here is like $5,000.
Yeah, yeah. I mean, that's important to know that people are coming here for affordability to say, okay. And then are you seeing people who are willfully just saying, screw it, I'm not going to insure my house?
Yeah, I have 4 clients that bought homes. They don't carry insurance, paid cash.
Yeah, yeah. In fact,
there's always people who do that, and also how quickly we forget about.
Yes. In fact, I have a guy that wants to look at property in there, and we were talking about the cost of insurance, and he said, I'm paying cash and I don't care. I'm not going to get insurance. Whatever happens, happens. I'm like, okay. So
yeah, one of the buyers came from California, and when I told him it was 12,000, like, that's what we pay now. Because the California unfair plan, they're
unfair.
California, they're getting screwed to the wall.
Oh, yeah.
Insurance is definitely a deal killer. It has been in East Hawaii because we have so much risky lava zone property. But even with my clients who I tell and I educate them quite a bit up front on if you go into lava zone 2, that insurance becomes a huge factor, and they're like, yeah. But then when it comes down to it and they actually get quotes, because I do, have them do that for their due diligence before making an offer. And I've had a lot of people just completely pull out and not want to buy there. So when I do say it is a factor, and you can't shop around so much, like there's not many options. So it is something you want to do your due diligence on upfront and get some quotes. And it's very eye-opening.
Even in Lava Zone 2, it's getting more expensive.
Oh, yeah.
Yeah.
In fact, I was talking about having the opportunity to give you guys resources for insurance companies that are actually still writing policies on this island. And Travis said that he would give those to you for about $5,000 or $6,000 if you want those. And
Well, if they're buying in Lava Zone 3, it's like fine. But if I tell you you're buying Lava Zone 2, I'm like, right out of the gate, probably going to look at, if you're on west side, you're probably starting at 5,000. If you're east side Lava Zone 2, I just had someone call me yesterday saying, yeah, we got a quote for 8,300 in Lava Zone 2.
oh, ooh,
That's crazy.
yeah.
Crazy.
Yeah, and that's all that's out there right now is HPIA, right? There used to be somebody else until December.
It used to be until January. There were a couple of other companies that what they would do it is they would write them as second homes. And then what you would do is you put the property in a trust and you'd rent it from the trust, even though you were the owner occupant.
Yeah.
And that they got around it and they knew it. The problem is there's too much exposure. So those companies that would do it, they wrote for like 3 months, 4 months, and they're like, yeah, no.
Oh,
It all fell apart because that was a way to do it. And now it's not. There's nothing. And it's a huge, I mean, I feel like the Big Island is this redheaded stepchild because everyone's saying, well, Maui this and Mount Honolulu that. And I'm kind of over it. It's like, it is what it is. Sorry. But it's also a nationwide problem. I just spoke with an agent in our office today. Their their insurance policy on their condo on Kauai was raised $700 HOA just to cover insurance.
ooh, a month.
California, things like if you have a condo in escrow, everything on the balcony has to be repaired and has to be reinforced because of the balcony collapses we've seen in some other places. That State Farm, they made an emergency request to raise their rates 22% in California.
Wow.
If you have State Farm now, but if you are looking for insurance in California, you can't even get a State Farm policy. I have State Farm because I've had them for about 1 billion years. That's the only reason. But it's not just homeowners either. It's all the insurance companies are looking for any little thing to kick you out or raise your premium significantly on all kinds of things, not just homes.
Yeah, yeah. So do you think, just so you guys, we're just talking about this, do you think trying to get your house to a point where they can't come after you, like even if you're a homeowner right now, replace the roof if it's getting old, do the stuff? I mean, do you think it's really going to matter?
I what do you mean? Like they're not going to come after you in terms of the insurance
Well, I
company?
mean, let's say that it's time to renew your policy. And then like what Delaney was saying, that this is nitpicky, any way to dump you from your insurance policy. That we've heard a couple of insurance companies say we don't want to have to give you insurance on a roof that's just about to end its life cycle, right? So they want to see a new roof before they give you a decent policy. So I'm thinking that with sellers who might be 2 years away from selling their house, maybe now's the time to replace an old roof so that they can sell it and not have to worry about getting hit.
Yeah, because the roofs are a huge issue all over the place. I've seen people commenting online about the roof killed the deal because of insurance. Now, I don't know what it costs. I know it's expensive, but let's say that what happens if you stopped paying your insurance because it was so expensive in HPI? Let's say you were in Leilani Estates and you had a mortgage and you stopped paying insurance. I know that mortgage company's going to kind of hit you with a policy to cover, make sure what's that going to look like? Is it going to be any worse than HPIA? Are they just going to go to you and
Yeah, Travis, what's going to happen when you say, I don't want my insurance policy, I can't afford it?
I'd probably go to the paying Sam. What would happen?
I don't speak for my company or any other mortgage servicer, but generally speaking, what's going to happen is they are going to place a policy, an expensive policy on your property, and they are going to tack it onto your loan balance, and so you are now paying interest. So it's gonna be in your payment, and it's going to be part of your loan.
Well, the insurance is part of your payment because you're paying that whether you're coming or going. But I wonder what that's going to look like. Are they going to call up HPIA and say, "Hey, you need this"? Is it going to be really paying $12,000 a year in Leilani Estates?
I just wonder if what used to seem really expensive is no longer, if everybody just quit and let them throw on their policy, is it really
I mean, I'm in
Our
AutoZone
policy
too.
catches up with our
Mine's
policy,
reasonable.
right?
But if I got slapped with a big bill, I'd probably just drop my insurance.
Yeah. Well, if you haven't, like, just so the people know here that obviously if you have a mortgage, that becomes a problem.
Please maintain your homeowner's insurance.
I don't.
Make your payment.
You make your payment, insure your house.
Maintain your property.
Yeah. So, if you guys are really smart in this group, if you're hearing this from like, outside, get cash. If you're going to go for an affordable house, pay cash and don't get insurance. So, but no, I think people need to know all this stuff because this cost of living it's realities of living here and understanding what you're going to get yourself into, because you don't want to be, a few months into it and all of a sudden you've lost your insurance policy. Now you own the house. Now you can't afford the house you just bought. So that's not good either. So I know that if Eric was here, he'd be doing the whole ring it up thing at this point. So we're gonna let you guys go, and thank you so much for all this information. This is what makes this really like a valuable like podcast. And if you guys are loving this stuff, please subscribe to this channel. These guys are awesome. Most of them sell real estate. Lance and I always joke around saying that these are realtors that sell real estate and they want your business. And Travis also.
If you're a realtor, raise your hand.
You raise your hand if you're a realtor and you sell real estate and you'd like to have business. There you go. So all of them are, working realtors on the island. If you do work with Travis, he does have that list of insurance carriers that he can offer. And so but we'll be back in late March. After my birthday, and we will be discussing whatever else is going on. Hopefully, the interest rates hold for people to get one more shot at getting those houses under contract. And if you guys do have questions, please leave them in the comments. We'll try and go through them and we can answer them next time we meet. And thanks to our wonderful group of humans. Thank you guys for being here.